Krispy Kreme stock has been surging. Is it the next short squeeze? In this video, I'll explain what's going on with the stock and show you with a DCF why the stock can double in price from this point with extremely conservative assumptions. So why the short squeeze? Just reading some of the stats here, the short interest is about 25 million shares, which is about 30% of the float, and they have about 50% off exchange and short volume. But I think the real story here is how it's priced and the fundamental opportunity ahead. So what's going on with the stock price lately? Well, since 2022, when it was trading at about $20 a share here in the first graph, since over time it's declined to about 447. And you can see that in the past 5 days in the next chart here, Krispy Kreme has been showing some positive momentum here, being up almost 36% in 5 days. So I think it's always important to kind of check out what the other side thinks and see if, what they're saying is valid or if you have a different opinion. And the first opinion I see swirling around from the bears of Krispy Kreme here is Ozempic and, how Ozempic is going to bury fast foods. Let me tell you, as someone who enjoys a burger or two and a donut or two, I can confirm that Ozempic isn't going to be putting this away. Okay. We don't even know what's happening with Ozempic. We don't know if it's a fad. I'm just cautious, and I really don't think people's food preferences are going to change. And if you take a look at McDonald's and Chipotle, just to think of two stocks real quick, they're hitting all-time highs right now. So I mean, I don't think fast food's going anywhere. And number two, debate I see swirling around here is the McDonald's deal was canceled. The McDonald's deal, no. Listen, because McDonald's was overcharging them and it created this unsustainable operating costs for Krispy Kreme. And I feel like Krispy Kreme didn't want to abandon the McDonald's deal because the brand, the name, shareholders loved it. And they were scared how people would react, and rightfully so. You could see that large dip after it was announced they lost that McDonald's partnership, but this should help bolster margins moving forward. I mean, you know, ditching off an unsustainable, operation here should help out the margins. And, combined with them dumping off Insomnia Cookie and relieving themselves of some of this debt, I think they have a lot of potential for margin expansion. And the other bear case I hear here is that they canceled the dividend. Good. I think it is so lame when people pay a dividend. What is this, 1970? Like, dude, reinvest in your own operations and grow the company and give me my payment through appreciation in the stock price. What am I, 85-year-old man looking for fixed income here? Throw it back into the company, double down on yourself, and let's start growing this, man. So is Krispy Kreme primed for a buyout? Why would I even say something like that? I say it because I've just noticed over time that the quick service restaurant industry here it is very cyclical in nature. It depends very much so on how much money, extra money people have, spending money in their pockets. Um, so when I look at Krispy Kreme's international expansion starting to take off and the possibility of margins ticking up from, discontinuing and disassociating themselves with unprofitable operations and stakes in other companies, some private equity firm could come in here and make an offer to go private. And this would not be the first time we saw this actually, and the stock could easily hit double digits overnight off the rumor alone. Why I'm saying this is because every distressed quick service restaurant that went through this period of cyclicality, however you want to say it, they've fixed themselves and been able to been bought. Dunkin' Donuts, for example, was bought at 23 times earnings coming out after a rough point to Inspire Brands. Panera was bought by JAB. Popeyes by Restaurant Brands Inc. Buffalo Wild Wings by Rourke. Could Krispy Kreme, if they turn profitable, could they be taken private next? So I think valuation is extremely important, and it's always good to consider how your company is doing relative to a peer group. So I just looked at some quick service restaurants here. Obviously, they don't sell donuts, but right, it's a comparable company, not an exact company match is the approach name. So you're looking at Krispy Kreme, Chipotle, Domino's, Texas, Roadhouse, Wingstop, Shake Shack. You can basically see their enterprise value for the, look forward looking to revenue, they all traded about 2 to 4 times, the outlier Wingstop growing through the absolute roof, seeing, almost 11 times multiple. And most of them are in the 2 to 4 times range, with Krispy Kreme trading at the lowest at 1.3 times. I mean, it makes you think the stock's undervalued and could be a good chance to hop in and buy right now. And Krispy Kreme has some good things going for them, which I'm going to cover here in the next 3 slides. Number one here is that on October 2nd, 2025, Krispy Kreme opened its first Hot Light theater shop in Madrid, Spain. It's a partnership with Glaciados, Originales, marking a milestone in accelerated global franchising. They're really expanding their borders here. They've Plans include over 50 locations in Spain, plus fast track growth in Brazil and Uzbekistan. And they have a very capital light model, which makes more predictable returns and helps, offset some of the challenges here they're seeing in the United States. And number two for Krispy Kreme is that they've recently partnered with NASCAR for sponsorship. And, I think this could prove to be another beneficial partnership for the company. And it just shows that management's still getting out there, still pushing the brand name and trying to regain some of that traction in the US. And lastly, this is a bit more older news here, but the FBI director Kash Patel, spurred a brief Krispy Kreme rally when he bought in on the stock. And I'm sure all of you know, Nancy Pelosi and following all the insiders at Congress, there could be something he knows that we don't. So it's just kind of interesting to take a look at the income statement for Krispy Kreme. And I know they're not profitable yet. We'll talk about that in just a minute. But looking to just their total revenue growth, they've taken it from 1.1 million to a high of 1.68 million by the end of 2023. And then 2024 is where things started to fall off, lost revenue by 1%. I think they're projected more like a 3 or 4% loss going into 2025. But with their international expansion and partnerships and dropping off some of the less profitable units, I think there is a chance here for their revenue to start increasing again. And I don't think it's ever going to be going to these 2022 and 2023 levels and double digit growth. But I think with very slow growth, and as long as they can maintain just a 1% profit margin, you're going to see the incredible opportunity ahead. But let's talk more about their profitability first. Cash flow is king. I don't want to see net income. I don't want to see EBITDA. I want to see at the end of the day, when everything's been said and done, the cash that came in minus the cash that came out is free cash flow. And that's what I have in my pocket to use and run this company and pay everything. So it's not looking that great. And just a quick glimpse before we hop into it, they changed their year end date from January to December. So that's why you see some of this jumbleness in the first 3 lines here. But just looking at 1231, 1231, 2023, 1231, 2024, and the LTM, they're in 3 straight years here of free cash flow losses, which is pretty alarming and not what you want to see. But, it's not about where the company's been, it's about where the company's going. And analysts are projecting a break even by 2026. So now it's time to show you with extremely conservative assumptions how Krispy Kreme can double from here. And I mean, if you're riding on this DCF and you're sticking with me here, just know that the bet here is that revenues are going to stay in the $1.5 billion range, and all the company has to do is make 1% profit. That's all. As long as from now until the end of the time, into perpetuity, the business can just keep in that 1.5 to $1.6 billion range and make 1% profit off of that, this stock will double. And let me show you what I mean. Total revenue in 2025 was 1.5 billion, and analysts are projecting basically flat revenue, 1.534. So let's just go ahead and be extremely conservative and assume 1% growth from now until 2030. And in the terminal, every year after that, from now until perpetuity, will grow at 2% a year. Very conservative assumptions. Next, the free cash flow margin. Forget it. Let's just say they aren't going to be profitable until 2031. That's how long it's going to take, okay? So, even with these extremely conservative assumptions and assuming they're going to get the 1.5% profit margin into perpetuity, I mean, this is going to yield, if you look at the line present value free cash flows, I mean, zero, -3. These are in millions, right? -3 million, 0, 0, 0, 0, and then you get 100 million in free cash flow. Well, when I'm looking at the stock at 100 million, and some of the free cash flows, they have about 21 million in debt and about 21 million in cash and about 1.4 billion in debt. So I'm getting an enterprise value of 1.5 billion here from the company. And if you divide it by the total amount of shares the company has, 171.2 million, you get a target share price of $8.70. With a current price of 423, it's 100% upside as long as the company just doesn't absolutely crap the bed and holds in the 1.5 to 1.6 billion dollar range and can make 1.5% free cash flow. I mean, these are not outlandish assumptions. These are very conservative, value, fundamentally driven, and you can see the opportunity here. All right, guys, that's all I had for you today. Hopefully, you learned something. Let me know in the comments what you think if you're buy, holding, or selling. See you next time.